Let's start off with the third quarter GDP number out of the US, surprising the markets coming in at 3.5% growth, and also just keeping in mind that a big part and a big chunk of that number is obviously about stimulus, and if you strip out vehicles, growth would only come in at 1.9%.
Yes, but it's still positive compared to a negative. And so technically we're out of the recession because we no longer have the consecutive negative periods of growth. However, one must notice, however, that a lot of this stuff is also like the American consumer coming back into play, and that's why it's good for the exporting Asian countries. Whether it's sustainable in the long run, as you said, a lot of it is stimulus driven, a lot of it is driven by tax breaks, by grants in terms of the cash for clunkers, etc. Those can't continue forever, and we have to see how the future is going to basically play out.
Well, seeing that stimulus plays such a big role in that third quarter GDP number, as I said earlier, a lot of analysts suspect that this is as good as it's going to get in 2009. Do you agree with that?
Oh, almost certainly. We are going to see tepid growth for the next several years from the developed countries in Europe and in America, and these countries aren't going to be able to basically get out of this situation until they've rebalanced their balance sheets, and that's not going to be a 1 or 2 year period. It's going to be maybe in a generational kind of thing, where people basically who have borrowed too much in their early lives have to basically save more than they should have saved before, just to balance their balance sheets, as I said earlier.
You mentioned the US consumer, and I think they're going to have to step up to the plate once all that stimulus is pulled out of the market. Do you think that the US consumer will be able to do so even next year, even looking at 2011?
If they do, then they've been quite silly about their finances, because like I said, I mean, they have borrowed more than they've spent more than they've earned, and therefore they financed that by borrowing. One of the reasons they were able to do that was because their asset prices were increasing, the house prices were increasing, so they felt wealthier, or they felt wealthier because they had more expensive houses, etc. But obviously that's paper money, that's money that was not really existing. Unless they sold their house, and if they still own their house currently, those house prices have fallen, so their net wealth has decreased, and therefore that is obviously going to, if they were logical consumers, as we all hope as economists they are, then they will obviously reduce consumption.
Well, taking a look at the local data that we've saw out yesterday, PPI 3.7% contraction, so in deflation at this stage, the biggest fall over the last 4 decades. And we also had CPI the previous day coming in at 6.1%, very close to that target band. Credit extension disappointing, so did money supply as well. What do you make of all this data that came out on the local front?
Well, one would have expected PPI to fall because obviously it's prices at the factory gate, and as we see, all prices, even though they've risen over the last few months, they're still way below the highs of last year, and that same thing applies to most commodity prices, and therefore you would expect the inputs to factories, etc., to be quite low. Another shocking number yesterday was the unemployment number.
24.5%.
Yes, I mean, it's 1 million jobs in the year so far, and it makes you wonder what the government's plan was at the start of the year when it was saying we're going to create 500,000 jobs. Where are those jobs right now? I can't reconcile those two figures, quite frankly.
Well, just looking at how the South African consumer is under pressure and unemployment is on the rise, MTN came out with third quarter subscriber numbers, and it's up 5% to 108.4 million. South and East Africa increased only by a modest 0.5%.
Yes, I would think from MTN's point of view, South Africa is probably one of its most saturated markets at the moment. There's much more expansion possibilities in the rest of Africa and to the Middle East, etc. That being said, I mean, we also have the problems with Telkom coming through. It's not a problem for us as consumers, but it's a problem for the telecommunications companies, because it seems to appear that the Competition Policy Board and the ICAS as well, and government is finally getting its act into order in terms of basically properly regulating these telecoms companies.
South Africa's average revenue per user only up 1% to 138 Rand. Is that disappointing for you? Yeah,
I mean, but you would expect people would be cutting down on these kind of things. I mean, cell phones, you could obviously use a normal landline if you had to. You could basically make shorter calls, make those missed calls that cost less. Those things are all viable for consumers, and also you don't have to upgrade to the more expensive smartphones. I mean, that's a big thing in the developed world at the moment. I don't know how well it's taken off in South Africa.
You mentioned the interconnect fees saga. We know that MTN and Vodacom would like to slash interconnect fees by 19%, and some say it's not nearly enough. Competition Commission also bringing Telkom under the spotlight, and now this company faces between 3.5 billion Rand to 4 billion Rand fines for anti-competitive behaviour regarding internet service providers.
Yes, the only problem I have with this is why weren't they there 5 years ago? I mean,
because apparently they've been complaining for about 5 to 6 years.
Yes, I mean, everyone that buys from Telkom is complaining that Telkom's prices are too high. And if you had to go, anyone that's ever traveled overseas, I mean, some viewers may not have traveled overseas, but anyone that's traveled overseas is amazed by how expensive South Africa's telecommunications are. I mean, we get much slower connection rates, and we get much higher prices. Our service here is insanely bad compared to almost any other country in the world, and even other African countries, not just other developed countries, and our costs are higher, which is shocking. And makes you wonder, why weren't these guys around 5 years ago when this could have had a huge impact on our economy?
Viv, just looking at the rand, because it did strengthen in yesterday's session, again, it is all about dollar weakness that came through. We were trading at around 7.88 in early trade yesterday, then we strengthened to about 7.70. And obviously, we've got to take into consideration that exchange controls were relaxed, and this is supposed to weaken the rand further. Do you think that it's going to have the impact that government wants?
Yes, and also Praveen Gordon was mentioning things such as massaging the rand to make it slightly weaker. Not controlling, but massaging. I don't know exactly what the differential there is going to be. But yes, I do think that we want a weaker rand. We want a rand above 8 rand to the dollar. Quite frankly, it's good for our economy to have that weak rand because it makes things such as imports more expensive. Therefore, it's easier for our local producers to produce for our local market. Also makes our exports cheaper and makes us grow better as a country. China, one of the reasons China is doing so well is that it keeps its currency quite low compared to the dollar. Its major export destination. If we were able to keep our rand a bit lower than where it is right now, it would have a big impact on very important figures such as the unemployment figure.
And of course, resource companies will benefit. We've got Anglo Gold Ashanti coming out with quarterlies today, and so too is Harmony.